10 years ago today, Bear Stearns, the august, huge global bank, collapsed. It was the first in a chain of events that eventually triggered the financial crisis and the Great Recession. Fast forward to today, the S&P has risen more than 300% since its March 2009 bottom. Why is one of the most respected Wall Street veterans saying, quote, "Markets are failing and failing badly"? Joining us now is the guy who wrote that, editor and publisher of the Gartman Letter, Dennis Gartman. Well, we'll get to the market thing in a minute, but let's bring this all together with Bear Stearns. 10 years ago, that was a gut punch, was it not?
It was unbelievable. I can remember where I was that morning when the news was coming out at one of the other networks, sitting at the desk, and I said, "Can you believe where Bear Stearns stock has just traded from $30 to $2 a share?" We were all stunned. We were stunned by the fact that it happened as quickly as it did. It probably, hopefully, shall not happen again in the future with better laws, with better oversight going in. But that was a stunning circumstance that morning, and it only got worse over the course of the next year and a half or 2 years.
And the point was that Bear got caught up in the froth, and it had way too much toxic junk on its books and even off its balance sheets. Remember that. What do we need to learn that we haven't learned from that horrific time?
Well, I guess we have to learn that bubbles do in fact occur. I doubt that we shall ever have a bubble. Hopefully we won't have one as enormous again in my lifetime, because that one was incumbent in the housing market where everybody has skin in the game. I doubt we will have another bubble of that sort of consequence. But we have to learn that bubbles do happen. They have to, and we have to watch when they do. They all have the same shape. Markets go parabolic, then they collapse. Euphoria happens at the peak, then they collapse. Human beings don't change. Human nature never changes. I guess it was Mark Twain who said, history doesn't repeat itself, but it does often rhyme, and we have to learn that fact.
We sure do. Why do you think the market is looking perilous right now?
Honestly, I think it looks very serious at this point, because let us think of two things. One, we've had 9 years, 10 years of a bull market predominantly predicated upon monetary authorities being as aggressive with force-feeding reserves into the system here in the United States, in Canada, in Europe, in Japan. We've begun the process of removing that. We've gone through, instead of quantitative easing, we are now in the process of quantitative tightening. Let us remember, markets always bottom before the economy bottoms. Markets always peak before the economy peaks. We probably have another year or so of economic strength, but with that economic strength, without the supply of reserves from the monetary authorities, that money has to come from somewhere, and historically it comes out of the capital markets. Historically it comes out of the stock market. And I think that we've seen a peak in stock prices in January, and now the peaks thereafter have been progressively lower, and that I find disconcerting.
You started to get nervous the last time you were on with this program, and now I need to know how you're positioning your portfolio. You had made a few tweaks just a couple of weeks ago. What are you doing now?
The only things, and I trade only from my own account, so when I say what I'm doing, it's what I'm doing. It's my own money at risk. The only things I have on are basically bond-like circumstances, and very short-term bond-like circumstances, things that have durations of less than 3 to 5 years. So that's predominantly where I'm at. I own a small bank here in Southeast Virginia, but that's it. And for all intents and purposes, I want to hold. I would like to own mostly cash. If the public is out there, I would say you have to use any periods of strength to reduce your exposure to the market, and just get less involved. I think that things are. The economy, as I said, is going to continue to be quite strong for a year and a half going forward. But stock prices always top out long in advance of deterioration in the economy itself. Well, use this strength that you've seen to your advantage.
You said avoid all cryptocurrencies. You just made some millennials a little annoyed. They're the ones who are looking and saying, hey, your old economy types of investments got us into a horrific recession when we were 10 years old and 11 years old. These people are now 20, 21, 25, and they like the anonymity and they like the difference of something like cryptocurrencies. They think it's the future.
I wish them well. I hope it works for them.
That's the worst.
I shall not touch it. Okay, let's understand. I think blockchain is brilliant. I think it's going to change the manner in which we trade. It's going to change the manner in which we transact international business.
Okay.
But do I have any respect, any hope for, any involvement in the cryptocurrencies themselves? No. I shall leave that to people who are either wiser or dumber than I am. I'm not quite sure which.
Dennis, great to see you. Thank you very much. Dennis Gartman.
Thanks, Liz.